$190 billion. I mean,
Yeah.
in a single year. That is what Microsoft is preparing to spend. And it is not on software. It is on concrete, copper wire, and specialized silicon.
Right. We are watching a single technology company deploy a level of capital that basically rivals the construction of a national highway system.
Or like a continental power grid. It is just a staggering figure.
It really is. And, it forces us to completely reevaluate what this company actually is. The test for artificial intelligence has fundamentally moved on.
Yeah, the parlor tricks are kind of over.
Exactly. I mean, we know the technology functions, right? We know an AI model can seamlessly draft an email or instantly summarize a sprawling one-hour meeting into actionable bullet points.
Well, for sure. Or generate complex blocks of code.
Right. But the real challenge is whether a sprawling software empire can take an unprecedented physical investment and somehow squeeze it back into durable long-term cash.
Before those underlying machines become obsolete.
Exactly, before the hardware just ages out.
And to set the stakes for you listening, I mean, Microsoft is not fighting for survival here. They are highly profitable.
Very much so.
But this specific window in time represents a historic shift in how the world's most powerful software company operates. Think of Microsoft right now as a wealthy landlord constructing an absolutely enormous, state-of-the-art office tower.
Okay.
But they are doing it before every single floor has a signed tenant. So the colossal construction bill is arriving on their desk today, but the rent checks arrive much, much later.
Which is a great analogy, because it changes the fundamental economics of the technology you use at work every single day. For decades, Microsoft practically invented the ideal economic model for a software company.
Right, the zero marginal cost thing.
Exactly.
Yeah.
It was an entirely frictionless system. You spend the money to build a product once, like a piece of software, Windows or Office, and then you sell access to millions of customers.
And you just sit back, collect those recurring payments, and watch the margins soar.
Because adding 1 million new users to, say, an Excel subscription doesn't require rebuilding the system.
Right, the marginal cost of that next user is practically zero.
And that zero marginal cost dynamic is what allowed them to convert a staggering share of their top-line revenue directly into pure cash. But artificial intelligence violently rips up that frictionless playbook.
Because it is physical.
Yes. The final product might look digital on your computer screen, but the costs beneath that screen are heavily, heavily industrial.
Yeah, we are talking about physical data centers spanning hundreds of acres.
Millions of highly specialized processors.
Heavy-duty networking systems,
Yeah.
industrial liquid cooling equipment, the actual physical real estate.
And the electricity. The continuous jaw-dropping flow of electricity required to keep it all from just melting down.
So the core question becomes whether they can actually convert an industrial-scale AI build-out into software-scale returns. Because the financial gap we are seeing is striking.
It really is.
I mean, Microsoft's AI business is certainly real. It is hitting a $37 billion revenue run rate. And in one recent quarter, their operating cash flow hit an impressive $46.7 billion.
Right, but then the infrastructure costs take their bite.
Yeah.
Once those heavy capital investments in data centers and chips were accounted for, their free cash flow dropped to only about $15.8 billion.
Wait, from almost $47 billion down to under $16 billion?
Exactly. And, free cash flow is the ultimate lifeblood of a business.
Right.
It is the money left over after a company operates and pays for all the physical assets required to sustain itself. It's the cash used to fund dividends, buy back shares, make strategic acquisitions.
Or simply build a war chest to survive an economic downturn.
Exactly. So when you see operating cash flow at nearly $47 billion, but free cash flow at less than $16 billion, you are seeing the direct toll of this new industrial reality.
But wait, businesses are actually paying them right now.
They are.
They are paying for cloud capacity, security tools, and coding assistance. Doesn't that $37 billion run rate prove they aren't just building for a theoretical market? I mean, we aren't talking about vaporware here.
No, not at all. The demand is definitely real.
Yeah.
Millions of paid users rely on Microsoft 365 Copilot, and developers everywhere use GitHub Copilot daily.
Right.
But revenue is only half of the earnings test. The other half, and really the much harder half, is what it physically costs Microsoft to produce that revenue.
Because the physical costs scale with the usage.
Yes, the business is generating more cash, but the physical infrastructure is absorbing it at a much faster rate.
So if AI isn't frictionless, how do they actually plan to trap the value they are creating? I mean, they have to lock customers in so tightly that these industrial costs pay off over a decade, right?
Yeah, and it seems to come down to two primary weapons, Azure and Copilot.
Let's talk about Azure
So
first.
Azure is the critical bridge. It sits at the center of the entire strategy, connecting the old software cache machine to this new AI infrastructure economy.
Right, because Azure is where corporations host their internal databases, their security systems.
And the complex AI models they are using to automate their workflows.
Yeah.
When a global bank builds a secure internal AI assistant, Microsoft wants that essential workload living permanently inside Azure because essential workloads translate to durable revenue.
And then Copilot serves as the distribution engine, right? Because Microsoft possesses a devastating strategic advantage here.
Oh, absolutely.
If a startup tries to sell a groundbreaking AI tool, they have to persuade a business to adopt a totally new platform, train their staff, trust a new vendor.
Which is incredibly hard.
But Microsoft bypasses all of that. They are already sitting on the hard drives of basically every corporate employee on Earth.
Right, they just place AI directly inside Word, Excel, PowerPoint, Outlook, Teams, and Windows.
And the goal goes far beyond selling a helpful writing assistant, doesn't it?
Oh yeah, they are building a moat.
Yeah.
Microsoft intends to become the absolute control layer for corporate work.
A control layer.
Yes. Imagine an AI system that deeply understands a company's internal proprietary operations. It knows which specific employee is authorized to access a confidential file.
Wow, right.
It maps the institutional memory of where project records are stored. And it knows exactly how the finance department defines revenue versus profit.
So, a generic chatbot is basically a temp worker who knows nothing about your company's internal politics or file structures.
Exactly.
But Copilot is attempting to become the veteran employee, the one who holds the keys to the file room and knows exactly how the boss likes their reports formatted.
That is a perfect way to look at it.
And once you hire that veteran, you can't easily fire them.
You really can't, because once an AI is that deeply embedded into a business's nervous system, changing providers stops being a simple software cancellation.
Right, it is not just turning off a subscription.
No, it becomes a terrifying migration of a company's entire institutional memory. No CEO wants to rip out a system that understands the complex internal permissions of their entire workforce.
Subscribe to the Unlayered Global now, because this channel does not just explain the headline, it reveals the hidden system underneath it.
But trapping that value assumes the underlying machines don't bleed all the profits dry first.
Right, the physical costs.
Yeah. Even with that control layer established, Microsoft faces a brutal physical clock on their hardware. Traditional software companies are entirely unaccustomed to fighting against the physics of hardware degradation.
Let's break down that physical clock, because this depreciation treadmill is fascinating. In the old model, Microsoft was rewarded for selling another digital copy at zero cost.
Right.
But the AI model requires them to supply active, ongoing computation for every single customer request.
Every single time. Every time a user asks Copilot a question or asks it to summarize a 50-page PDF, that request physically consumes processing time.
It uses memory, networking bandwidth.
And it draws power from a data center. So more customer usage is undeniably good for adoption, but it is physically expensive to fulfill.
Which forces efficiency to the forefront. I mean, the whole strategy hinges on whether Microsoft can reduce the cost of delivering intelligence faster than competitors force down the price customers are willing to pay for it.
Exactly. They are desperately trying to optimize data center design. They're trying to engineer custom processors.
And routing models, cleverly, right? So a basic calendar request doesn't wake up a massive, power-hungry AI model.
Yes. But the depreciation treadmill is where this gets truly difficult. Because the concrete shell and the steel of a data center building might last for decades.
Sure.
But the incredibly expensive processors sitting inside that building have a remarkably short economic life.
Yeah, I mean, a processor might physically function for 5 years without breaking down, but it loses its economic value long before that.
Right. A newer generation of chips will inevitably hit the market that runs twice as fast or uses half the electricity.
So they are trapped in a relentless cycle.
They really are. They buy the most advanced processors available, install them, generate some revenue, record the depreciation.
And before those chips even physically wear out, they have to rip them out and replace them just to stay economically competitive.
Exactly. The structural risk here is that The technology cycle moves fundamentally faster than the revenue cycle can pay for it.
And the companies selling them those components know exactly how vulnerable they are to this cycle.
Well, they know.
The supply chain is extracting an absolute fortune. Microsoft projects that $25 billion of their calendar year spending is purely from increased component costs.
And that is wild.
Right. That isn't $25 billion to buy more capacity. That is $25 billion purely in higher prices for the exact same equipment.
Because the power dynamic is completely inverted. Every major technology platform on the planet is desperately competing for the exact same advanced processors.
At the exact same time.
Yes, the same memory modules, the same electrical transformers. When a handful of suppliers control the bottleneck, they hold all the leverage.
I mean, think about the semiconductor foundries. There are only a few facilities on Earth capable of manufacturing these advanced chips.
Right.
So when Microsoft knocks on the door, they have to pay whatever premium the foundry demands. They are paying a toll to the chip designers, a toll to the foundries, and a toll to the memory suppliers equipping the servers.
And the networking companies connecting the computing clusters are charging a premium too.
Of course.
The utilities providing the electricity, the grid companies building the substations,
Yeah.
they are all setting their own terms.
Even the cooling specialists.
Yes, construction firms building the campuses and landowners leasing the sites, they're all extracting their piece of the $190 billion.
It is a profound irony, really. For decades, Microsoft was the toll collector.
They were.
They extracted high margin fees from everyone else in the PC ecosystem. Now, the world's most powerful software company has been transformed into one of the world's largest industrial customers, forced to pay tolls to anyone who owns silicon, concrete, or copper wire.
And those industrial constraints introduce problems that Microsoft cannot simply buy their way out of.
Right.
No matter how much cash they generate, they face absolute physical and strategic limits. And the most stubborn, immovable constraint of all is electricity.
Yeah, you can construct the most visually stunning data center in the world, pack it with $10 billion of the most advanced silicon ever created.
But if the local grid cannot deliver enough electricity to turn the lights on, it is a giant, useless paperweight.
Exactly. So the cloud strategy is now inherently an energy strategy.
And because it relies on energy, it instantly becomes a political strategy.
Right, because a data center consumes a staggering volume of power.
And it requires massive water consumption for cooling.
Which is why we are seeing intense pushback from local communities and regulators. I mean, they might appreciate the temporary construction jobs.
Sure, initially.
But they are aggressively questioning the long-term drain on local power grids, the environmental impact of the water usage, and the validity of the tax incentives these tech giants demand.
And governments face a complex contradiction here.
Sure.
Well, on a national level, they desperately want AI supremacy. They want the technological boon and the economic growth to happen within their borders.
8/10.
But on a local level, they face furious households and traditional manufacturers who are suddenly competing against AI data centers for the exact same electricity.
Wow. And the ripples of this $190 billion infrastructure bill go far beyond local utility politics.
Oh, absolutely.
It impacts the entire market through capital allocation. Because Microsoft is so massively integrated into everyday index funds, pensions, and retirement portfolios, their valuation sways the broader stock market.
And internally, it is a strict zero-sum game. Every dollar spent pouring concrete for a new data center is a dollar diverted from repurchasing shares.
Right. It is a dollar that cannot be used to acquire a strategic competitor.
Or reduce debt. Or just be held in reserve for a recession. The opportunity cost of their cash has totally transformed.
But this immense capital drain forces them into a corner strategically as well, doesn't it? I mean, Microsoft's early aggressive partnership with OpenAI gave them a massive head start.
It did. It gave Azure immediate credibility.
But they cannot rely on a single outside supplier indefinitely.
No, they can't. A platform of Microsoft's scale cannot let the economics of its entire future depend on a third party.
Because if they rely solely on OpenAI,
They basically surrender the ultimate value of their newly built operating system to that partner. They would just become a distribution pipeline for someone else's intelligence.
which explains why they are pouring billions into building their own custom chips
Right.
and creating a multi-model platform capable of supporting several different providers. They have to maintain control over their own destiny and their margins.
Exactly.
But ultimately, someone has to pay this massive infrastructure bill. Does this mean you, the listener, will eventually see higher subscription prices for basic tools?
It's very possible.
Or find yourself intentionally trapped in Microsoft's ecosystem just to subsidize these data center costs.
I mean, the bill does not just vanish. It has to be absorbed. And most likely that will be through bundled premium pricing, higher usage-based fees for cloud computing, and the very ecosystem dependence we just discussed.
Right.
The $190 billion bet forces us to look at two distinct futures, the bull case and the bear case.
Let's lay out the bull case first.
Okay.
Microsoft executes the strategy perfectly. The $190 billion goes down in financial history as a brilliant construction cost.
Right, they leverage their global cloud platform and their decades of entrenched enterprise trust.
The data centers fill up, AI usage rises exponentially, their custom chips successfully lower the cost of computing, and the margins stabilize.
In that scenario, they successfully build a new corporate operating system. They become even more vital to daily work, free cash flow recovers, and the massive upfront investment looks like a visionary bargain that secures their dominance for another generation.
But the bear case doesn't require AI to be a failure, does it?
Not at all.
It merely requires the financial returns to arrive too slowly. Businesses might adopt AI, but firmly resist paying a premium price for it.
Right. Copilot might be a useful tool, but not an indispensable veteran employee.
And competitors could offer similar capabilities for far less money.
Or open source models could erase Microsoft's technological differentiation entirely.
And if power and hardware costs remain permanently high, the depreciation treadmill will spin faster and faster without the revenue ever catching up.
Exactly. Microsoft would still grow, and AI would still change the economy, but Microsoft itself transforms into a capital-intensive utility rather than a frictionless software machine.
So it sounds like the biggest risk isn't that Microsoft misunderstands the technology. The risk is simply the wait.
Yes.
In the technology sector, being early and being wrong can look completely identical for a really long time until the cash actually starts flowing back.
And that waiting period is the true earnings test. It is not about beating a single quarterly revenue estimate.
Right.
It is not about an impressive product demonstration on a brightly lit stage. The real test is whether Azure can grow without permanently sacrificing software margins.
And if Copilot becomes a deeply ingrained habit that customers refuse to cancel.
Precisely.
We are watching the world's most powerful software company rebuild its fundamental engine while driving down the highway at 200 miles an hour. It leaves you with one critical question to watch over the coming years. Are they constructing the most valuable enterprise infrastructure platform of the next generation, or are they committing themselves to a permanent cycle of expensive construction just to defend the software empire they already own? Subscribe to the Unlayered Global now, because this channel does not just explain the headline, it reveals the hidden system underneath it.